Welcome back to the third and the last session of this second Relearn series of income tax. Um, the speaker is a bit delayed. He is just down only. He's joining in 2 minutes. And I had a privilege of requesting Honorable Chairman of Western India Regional Council, Ankit Rathi, to come and address us. The all initiative are being taken under the leadership of CA Ankit Rathi. I'll also request him to talk about our upcoming regional conference, the flagship program of WRC. May I request Honorable Chairman Ankit Rathi to address all of us?
Very good afternoon. It's indeed pleasure to be here. At the outset, let me first thanks to Ketan Bhai for organizing this entire income tax relearn series in every week. Sir, thank you so much. It's a great initiative. Despite of 31st July month, we can see the participants. It's actually so the need of the heart of the topic. Let me also recognize the presence of coordinator Ankush Bhai. Ankush Bhai, thank you so much, friends. Let me tell you, Ankush Bhai is always available for each kind of any kind of help to our institute or Western Region India Regional Council and the fraternity. Friends, I am not talk much about the income tax because it's not my core area of practice. But definitely, I wish to share you about the 30th regional conference. This time, first time ever, we are hosting regional conference on the GEO Convention Center on 23rd and 24th August. With the massive participant, we anticipate participants somewhere around 3,000, 3,500, with more than 60 panelists and speakers from across India, over 100 exhibition stall which showcase how technology going to change the way we are doing auditing, accounting, forensic, ESG, and all others thing in this we designed this 2 day regional conference in such a way that each and every member can get benefited from out of this. We take the sessions like work-life balance from in which we invite three army officials, in which one of them got Paramveer Chakra, the highest category awards. He will speak about what kind of discipline we need in our real life and how to work-life balance and all that. We requested God Gopal Das for motivation session. We invite various other leader friends. Let me also share you in this 2 day regional conference. The basically our main theme is the Sasak Siya Viksit Bharat, the vision develop India by 2047. Friends, let me tell you our economy recently crossed 4 trillion US dollar economy, and as per the prediction of our visionary leader, our economy going to become a 35 to 40 trillion by 2047 when we celebrate 100 years of our independence. So that's why we keep theme Sasak CA Viksit Bharat, the developed India by 2047. I request each one of you, please do register in this. It's an annual event in which we are trying to accumulate each and everything which are currently happening in the India. One session I am let me highlight about the one session is about the what is happening in global south. What's global south is now global north. In this topic we are discussing what's happening across the global, how we can impact in India. One session is about the then sustainability and uh, in other than this 2 day parallel session, we are also keep parallel session also in separate track in which IBC, Gift City, and various other. So it's my humble request, please do register in 38th regional conference of our Western India Regional Council. And the last request from my side, please do visit our Western India Regional Council website in which we have a tab called My Role at the WRC. We inviting each one of you as a coordinator, speaker, and the author in our newsletter, or if you wish to contribute in any publication which we are coming out in near future, I am happy. We all are happy to assist you. Or if you think as a regional council or as a ICI, we need to do particular things or particular event, please do let us know. We are happy to serve. We all are always available for the fraternity. With this, I again thank you, Ketan Bhai. Let me also recognize the presence of our past chairman Murtuza Bhai. Murtuza is also always available for the fraternity. Whenever we call Murtuza, we need to do this kind of program. We need your help in designing the program. He is the leader from productivity and also expert in internal audit. Let me also recognize the presence of immediate past secretary, my dear friend Saurabh Bhai Ajmera. Saurabh Bhai, thank you so much. He is the currently PD committee chairman. The entire event is happening under the PD committee. With this, I wish you a happy life. Thank you so much.
Thank you, Chairman sir. With this, may I request young and dynamic immediate past secretary Saurabh Ajmera to address all of us. Thank you.
Thank you, Ketan Bhai. Again, young and dynamic chairman of WRCC, Ankit Rathi ji, past chairman Murtuja Kachwala ji, coordinator Ankush Bhai, the architect of this program, Ketan Bhai. What a lovely series you have organized. Let's have a big round of applause for Ketan Bhai. I think chairman was mentioning about this Sashakt CA Viksit Bharat, that conference we are organizing in Geo Convention Center. One important aspect I want to highlight for this conference. First time ever at WRC, we are trying one unique concept in this regional conference, that is live investment pitching session. Generally, we heard about Shark Tank for startups, but first time we are providing opportunity to all the companies, all your clients, for all your clients, where they need pre-IPO placement, private placement, equity sale and purchase kind of things. So in this live pitching session, we have already received consent from Sunil Singhania ji, Vikas Khemani ji, Vijay Kedia ji is also, we are having soft confirmation. Then Mukul Agarwal ji is also, we are trying to have on this panel of investment. So my humble request to all of you, if you can invite your client, those want to have private placement or pre-IPO investment, OFS kind of thing, so we can have a live pitching session for them in this grand program of WIRC. And friends, today, I can say we are more than 4 lakh chartered accountant in this country, and we have a huge responsibility for the economic development of country. And where I believe that two things are very important if we want to grow in our professions. That is to see first we have to connect with our professional, and where the role of WRC is very important. Today, WRC is providing lot of opportunity for the networking. So my humble request, whenever you are coming to WRC office, whenever you are coming to WRC program, please do connect with your professional brothers and sisters. And second thing, C stands for collaboration. After connecting, you can have a collaboration. So our dream to have one Indian Big Four or Big Ten firm like that we can achieve with your participation and your collaboration. So again, in this regional conference also, we are keeping some session for the networking promotion. So you can have advantage of connect with your professional colleague. With this, I will not take much of time. Our speaker, CA Ashok Mehta ji is already with us. Thank you, Ketan. Thank you so much.
Thank you, Saran. I think, I personally believe whatever the PD committee chairman and the honorable chairman has spoken about this conference is not even enough. Uh, हम सब सीए हैं तो कॉस्ट की ही बात करूं तो वी आर जस्ट चार्जिंग हाउ मच 4,000 the per person cost of this conference is more than 20,000 rupees and we are meeting that balance 60,000 16,000 from sponsorship and it's going to be an amazing conference. Different tracks will be there, so many stalls will be there, and the 2 days conference, which earlier was hosted by ICI, was itself charged, was the fees were around 10 to 15,000 rupees, and WRC under the dynamic leadership of Ankit has explored this. So take a maximum benefit of this conference. I think it's going to be one of its kind of conference. Without further ado, may I request Coordinator Ankush Bhai to formally introduce Ashok Mehta sir.
Good afternoon to everyone. CA Ashok Mehta, he is a partner at DR Mehta and Associates and looking after statutory audit and internal audit of public and private limited company, tax litigation and international taxation and FEMA issues. He has presented papers at conference held at WRC and CTC, contributed articles in the chamber and AIFTP journals. He was a convener at the Mumbai Central CP Study Circle of WRC. He is also a part-time lecturer at Sydenham College of Commerce and Economics. He is a visiting faculty at Institute of Distance Education, Mumbai University, and he is a chairman of Direct Tax Committee for Assessment Year 17-18 of Chamber of Tax Consultant, currently chairman of Research and Publication Committee. Friends, with this short and brief introduction, let us welcome him with a huge round of applause. And before handing him the mic, let us present him with a small memento.
For digital conference, you can just scan the barcode which is there in the flyer and you can register over there. Yes. So much, sir.
Um, Ashok Bhai, I just wanted to say 1 second. Ashok Bhai is the person who will be, talking even in our live budget session on direct tax. So Ashok Bhai, thank you so much for agreeing for that also and for today's session. So please, once you listen to him, I'm sure you will all attend even budget live session where he is the person who will give the immediate feedback on the budget on direct tax. Thank you, Ashok Bhai.
Good afternoon, friends. Uh, I'm sorry to be late if rain and Google don't give you the right time. Yeah. Uh, so I'm going to do so auditing is serious business. This is a quote from President Devashish Mitra. I start all my audit lectures with this. It's a serious business. If you can't get in, if you can't meet the expectation, we need to leave that particular area of practice. Coming to how we're going to discuss these things. So first, I'll take a few routine things. You might be aware of it, but I think that's important before you actually start looking at amendments. So I'm going to do some general things about tax audit which you should be careful about when you start doing a tax audit. Then we go to the amendments. Then the quality control body comes out with some common errors. So I've made a compilation of that. We'll discuss those so that we are aware that we don't make the same mistakes in our audits. And then there is this constant live questions about applicability of 4480 and audit, which year on year comes around. So if time permits, we'll do the other three things if possible. So in case of non-corporate assessees, you need to do the entire audit to be conducted and 3CD details to be certified. You need to give the true and fair view about the financial statement. Regard to audit in case of corporates, only details for corporates 3CD is to be certified. Reliance will be placed on the work of statutory auditor, SA 600 should be looked at using the work of other professionals. Some additional verifications to be done when you're doing a statutory audit of the company and also the tax auditor, then it's a different question. But many of times statutory auditor is different, tax auditor is different. In that case, you need to rely on the documentation of the other auditor. You need to add certain things and do certain further verifications for tax audit. Uh, Correlation with details of audit of companies. Uh, so you need to, so when we do the common errors, you'll realize that there are company law also requires certain details to be given, which are common with your 3C. Now, those details, related party details, loan details, have to cross tally. If you have not cross tallied the details with the company accounts, it's really a grave error. Your audit is as good as the quality of your article clerk or the person who's working on it. So you should train him. Institute has a lot of courses for article clerks. We should encourage everyone to attend those courses. Do you take the signature of the SSE in from 3CD? Nowadays, everything is online. The SSE signs through and verification is done through online. However, for bank purposes, SSE does come to us and ask for signature. When you are going to sign, you should see that you take his signature first. It is ultimately his responsibility. The details are to be filled in by him, and therefore, please insist on his signature before you sign and give it to the bank because he is equally responsible for those details. We generally prepare all the details. However, it is important that you take his signature so that there is some sort of accountability. about adding a few paras in 3CB and 3CA in 3CB in point 5 and 3CA in point 3. You have to understand that the institute has come out with SA 700. That SA 700 talks about responsibility of the person, the auditee, and then says what is the auditor required to be done. Now, 3CD and 3CA do not have those paras. It's a standard form where you're supposed to certify certain things. Now, when you're supposed to certify certain things online, the institute has recommended in the guidance now, not in the 23 and prior to that, that you need to put certain paras saying that it is the responsibility of the client to fill up those details and you have only verified that. There no standard paras are given in the guidance note. Please put them in the notes. Otherwise, it becomes your responsibility. And as I take you through the common errors, this is one of the things the institute has year on year trying to point out that these paras need to be in your 3CB and 3CA so that your liability is restricted. Uh, Documentation and professional responsibility as per auditing standards notified by ICI is with regard to Tax Audit is also there. These are some of the uh, standard auditing practices which are applicable to you. Engagement letters. Please issue an engagement letter in all cases of audit which you do. It is one of the requirements. The institute has come out with the guidance that from I think 2024 or 25, you will not be able to do any assurance work unless you are peer review. One of the requirements of peer review is to have engagement letters in all assurance works. There are standard engagement letters provided by the institute. Sorry, by the institute on the website also. Use them. Then agreeing audit documentation, all of you all are aware. Uh, Relying on the work of internal auditors, statutory auditors, I've already discussed that. The other things are very common. I'll not spend time. Who cannot do tax audit? You cannot do tax audit of your relatives. Relatives definition is the widest in 288. Please look at it before you get into audit of any of your relatives. You cannot do audit of any of it includes linear descendants of brothers and sisters also. It is not the 48.2 definition of relative, it is the wider definition in 280. So please look at the definition before you start doing audit of any relative. All the other points, I think it will be circulated, so I'm not wasting time because I have a lot of things to do with regard to this. Uh, do you need to communicate with the previous auditor? Yes, you need to communicate. However, in the last year there was no audit, there is no need to communicate to the previous auditor. The limit for tax audit is 60. HUN branch is considered one assignment. Audit conducted under 44 AD and GST laws is not included. You need to keep track of audits which you do. The system keeps a track. So your PAN number, when it is lodged as an auditor, the system will tell you you've done more than 60 audits or not. So you need to be very careful. You cannot sign on behalf of the partners. Uh, yeah, any errors, they can levy a penalty of 10,000 rupees. But more worse than that, they will before that complain to the institute about the conduct. So any penalty under 271G, there is a standard departmental circular where they have to intimate the relevant authorities. Now coming to the amendments. Yeah. We're going to do these amendments and the law with regard to that. So amendments, maybe I've got only 7 amendments. However, this requires you to have an understanding of the law. So therefore, I'll be doing certain part of the amendments which have been brought up, which has led to these amendments in Form 3C. So therefore, we'll do this in detail. So first is clause 8A of Form 3CD. Basically, the prior to the amendment, it was saying it did not have 115 BAE. After the amendment, it has got 115 BAE. 115 BAE is basically a cooperative society which is involved in manufacturing. So what had happened was they had come out with concessional rate of 15% with regard to company. They had not provided for that for the cooperative society. In 23, they realized that and they've amended the law. So this basically says that if the person is covered by 115BAB, you need to notify whether the concessional rate is there. The clause requires whether the assessee has opted for any special rate regime under the Income Tax Act, wherein the assessee could be entitled to concessional rate of taxation. You need to see whether the assessee has filed either the 10 IB, IC, ID, IL. If in the earlier it is filed, you need not file it again. But if and you need to keep that on record for your audit evidence purposes. If the assessee intent, so what happens is that you do the audit before the return is filed. The assessee says that I am going to avail this particular benefit, and then based on that, you fill up the audit report. Now, if you are filing the audit report based on assurance of the auditor, you need to first take that assurance in writing. And you have to mention in your audit report that I am relying on this assurance in 3CA subclause 3 or 3CB subclause 5, saying that I have relied on this assurance to take note of that particular clause. Yeah, so last year's form to be filled, if it is filed, please check it. I've covered this. Yeah. So I'll just briefly take you through 115 BA, the clauses. So 115 BA, AA, BAB talks about domestic companies. 15 BAC will be doing in detail because it involves individual and HUFs. So certain amendments are there. So it covers individual HUF, VOPs, VOIs, and artificial persons. 115 BAD and BAE talks about cooperative society, one in manufacturing and those without manufacturing. The assessment years are written over there. Okay. Now, 115BA was initially the first section which was brought in. Uh, after first, the company should have been formed after 1st March 2026. The rate was 25% plus surcharge. Similarly, then they came out with 115BAA. Majority of the companies today are under 115BAA. And you have the last BAB. If you are doing manufacturing, then you have a concessional rate of 15%. A tabular form is made to give an understanding of these sections. This will be circulated, so I'll not spend much of time. Only thing is there are a lot of deductions which are not available. We'll be doing certain disallowances and write-off of losses based on this deductions which you can't claim, which we'll do it later on. One also has to be clear that with regard to allowable deductions, so you can't claim 80G under 115BAA. Similarly, you cannot claim it under 115BAB. So one needs to be careful when you do that. You need to fill up the relevant form before the filing of return for this purpose. You can claim depreciation. You can also claim carry forward losses till the loss is not associated with the additional depreciation under 32(1) or any of the deductions, 35AD or something like that. Unless it is there, carry forward losses are allowed. So there's a misconception carry forward losses are not allowed. It is wrong. Carry forward losses are allowed. Only thing which is not allowed is additional depreciation losses if they are there. Right? So MAT is 115BA had MAT, the others did not have MAT. So once you don't have MAT, you also lose the MAT credit. So where you have a huge MAT credit, one has to look at the benefits and loss disadvantages before you shift to a new system. Coming to 115 BAC, 1A, the new system. This is going to be the default system. So return will have this default system. There has been a change in slab rates. The basic limit is 3 lakh rupees. The slab rates have been changed to 6 slab rates. The 25% slab rate has been removed. So instead of 2.5 lakh rupees, now it has become 3 lakh rupees each. So up to 3 lakh rupees it is there, 3 to 6 it is 5%. And it goes on 10%, 15%, 20%, and then 30%. So that 25% slab rate is removed. Earlier, you did not have UOB, BOI, and artificial judicial persons having this particular deduction. Now you can claim that all are covered under this. The highest rate of surcharge only in the new system is 25%. So if you are following an old system, above 5 crores, you will have 27% surcharge. Here, you have got a concession of 25%. Effective tax rate at the higher slab will become less, and therefore the new system becomes incentivized because of the lower surcharge. So in the new system, you will have a flat rate of 39% above 5 crores. Whereas in case of the old system, it will be 42.74%. So this is general. Old regime had certain deductions. Now you don't have them. You can switch it only once. So if supposing in the current year you are able to go for the old system, then you need to fill up Form 10 IE. After filling up the form, you can go into the old system. If you don't fill up the form, you are in the new system. So default system is the new system. If you don't fill up the form before 31st July or the due date of filing return, it will be deemed that you will follow the new system. So if you are all belated returns, all those returns will be under the new system. You will not be able to avail of the old system. This is a comparison. Uh, so total income level eligibility 5 lakhs, 7 lakhs surcharge. Uh, so recently, the new utility which has come, they are allowing surcharge even if my income is above 7 lakh rupees under the new system. So there's some error in that system. They are trying to rectify it. But yesterday itself, we were finding some return. Income was 7 lakh 90,000. Still, it was allowing me a rebate of 25,000 in the new system, uh, which is not correct. If you have income more than 7 lakh rupees or you have income more than 5 lakh rupees, then you are not eligible to the rebate of 87A. This will be circulated, so I'll not spend much time on this. Uh, the only deduction available is 80JJA and 80CCD2. So 80CCD2 is NPA, your contribution to National Pension Scheme, and 80JJA is new employment. So if you do some new employment, then in that case you get those benefits. All other exemptions are not available in the new regime. What is the proof of new employment? You need to have that PF and ESIC registration of both people. But if they are switched from one employer to other employer. No, so that employer switching is fine. That is not an issue. You should have your last year's strength. Compared to that, it will be compared. So the proof of employment is your NPA salary. When he shifts to your employment, he shifts the PF also. So that is enough. Yes, that is true. Very rarely taken deduction. 80JJ is a very rarely taken deduction. A lot of people don't take it. Major action against an auditor for wrong certification of 80JJ. So one of the major employees had continued or something like that. I mean, one needs to know the details. Yeah, that was a disciplinary case. Yeah, so that was one of the reasons. Disciplinary. Asking anything about the proof. Yeah, you should verify. You are going to certify it. So, coming to a comparison, so the rate is 42.74 above 5 crores. Here it is 39%. That's the difference. Yeah. What about capital gains? Capped at 15%? Yes. Yes. So under the new regime, you have 112A, 112, 112A, 112A, the same thing continue. The taxation of those income will be treated separately. This is a special tax. Because the 143 are coming out. Yeah, they have, yeah, which is incorrect. So, here at the moment, default is 37%. Yeah, so the instant, yeah, you have to take 15% safe. So representations have been made by the institute, by the various associations saying that they should be rectified. That's what I was talking about. The new utility which they updated after 1st July had more errors than like a nice example of 15%. Yeah. No, sir. Yesterday, that's what I was telling you. Even for rebate, that is the problem that you get deducted rebate even if you have higher income, which will ultimately lead to tax, and the client jumps on you saying that, oh, you made me pay more tax. Yeah, demand will come with interest. Yeah. 115 BAD talks about cooperative societies. Resident cooperative societies can claim 22% benefit. The cooperative societies will not be allowed to claim 32, 33 ABA and all those deductions under Chapter 6A except APJJA. It should not set off losses carry forward. So losses carry forward except for depreciation due to additional depreciation will not be allowed. Other losses will be allowed to be carried forward. Rate is 22% plus 10% surcharge plus 4%. Effective rate is 25.17. In respect of income chargeable to tax at special rate as per provisions of Chapter 12, the rates will apply as per that chapter. 115B talks about manufacturing cooperative societies. Here, if you are resident from 1st April 23, that is the year in which it has been brought in, if you commence manufacturing on or before 31st March 24, the business should be not formed by splitting or reconstruction like in ATIV. It does not use machinery plant previously used for this purpose. It does not engage in any business other than manufacture, production, article or thing, and research in respect of the distribution of such article. It should not claim deductions under these sections. 15% of the income derived from the incidental or manufacturing or production of the other thing. In respect of chargeable to special rates, those will be covered under section 12. It is regard to non-manufacturing income. So it could be that I do manufacturing of a product, I do trading of some other product. That trading income will be taxed at 22%. The balance income will be taxed at 50. Special rates will be taxed at special rate. Okay. Profits in excess of the amount of profit. So if to get into 15%, you have traded with some related party and you have shown profits which are higher than what it should be the profit, those profits will be taxed at 30% as and when the officer assesses it. So, supposing I've done transactions with my related party, instead of showing 10% margin, which is my normal, I will somehow arrange the transaction to do it at a higher level. In that case, and it is identified, then the officer will charge it at 30% when he do it. You will not get the benefit of 15%. Yeah. Yeah, in a way, you will not get the benefit of that particular mistake. Clause 12A after that. This is something which was, it's only a rectification of something which was already there. So they've added the term 44 ADA. It's in red over there. So the term 44 ADA is added. Whether the profits and losses include any profits against accessible in the presumptive basis, if yes, indicate the amount relevant to section so and so, so and so. And if you look at any other relevant section, so your utility and your institute guidance note was providing that you need to give the 44 ADA separately. So it is only that 44 ADA is now added over here to just rectify something which was already included. Even the utility was doing it. 44 AD is basically for taxation of professionals and an assumed rate. Everyone's aware of it. It is not available for individuals. It is only available for individuals and partnerships. Profession is defined under 44A AA1. So all professions are not covered. Professions defined under 44AA1 will be doing it separately. Up to 50 lakh rupees or 75 lakh rupees if your cash receipts and cash payments is below 5%, it is 75 lakh rupees. Otherwise, the limit is 50 lakh rupees. You're supposed to disclose a profit of 50%. If you don't disclose a profit of 50%, you're supposed to get audit done. And the SSE is assumed to claim deduction under 20 and 38. No separate deductions for salary, interest, or partners is allowed. What is included in your cash receipts? I think it's there. You all your debtors, loans, advance from customer, sales of fixed assets, reimbursements, pure agents, everything is covered except amount contributed by partners and shareholders. Everything else will be covered. Similarly, for payments, cash purchases, paid to creditors, sorry, loans, borrowings, advance, all this will your total cash receipts are to be taken into account while calculating that 5%. Now, what is the profession? So, this is about legal and medical engineering, profession of accountancy, that is only chartered accountant. Your accountants are not covered over here. Technical consultancy, interior decorators, professional of film industry, film artists. So, actor, camera, all are professionals. There is a notification of 77, profession of company secretary, profession of information technology. All information technology professionals are covered over here. And profession of authorized representatives. Now, there is this common query which gets asked that not chartered accountant firm, but law firms, the partner get more than 50 lakh rupees, around 50 lakh rupees salary from this thing, which is taxable as salary income. So if I'm a partner in DR Mehta and Associates, and DR Mehta and Associates give me a salary of 30 lakh rupees, can I claim that I'm a professional business receipts chartered accountant? Therefore, I will offer only 50%, 15 lakh rupees under 44 ADA. My answer is no. A lot of people are doing it. It is incorrect. There are Bombay High Court, Parizar, and Madras High Court will be taking it with time permits, those judgments, where it has been said that it is only defined, it is not business or profession conducted by you. It is firm business and profession. The salary is received, you can't claim 44 ADA in that. Just to clarify, it's a very common question with regard to that. It is income or profession. It is income or profession, but you can't claim 44 80, 50%. So if it is possible that you have certain expenditures which you want to claim against it and you claim that. But to say that I will keep only, I will show only 50% under 44 ADA and capitalize it, that's not. In any case, presumptive taxation is so much percentage or the any other figure. There's a general misconception that it is 6%, which is not true. Which is not. Uh, so you have a few judgments with regard to 44A, where you are transport business. There it says that you show 7,500 per truck and I will not ask any questions and nothing. There the language is different. So all those judgments with regard to 44A or AF in the old this thing does not apply over here because the language is changed out. Please look at the law. The law says that 8% or 6% or 50% or the actual profit which is which is there. As estimated by the assessment. Yes. So there is a change in the limit from 2 crores, it has been made to 3 crores, provided your 5% total receipts. Just going back to one of your earlier slides, yeah. 75 lakhs is not a blanket figure for 44 ADA. No, if your receipts are less, 5%. Yeah, 5%. It's more related to the 3 crores which is under 44 AD. Yes, same thing. It 3 crores in 44 AD or 10 crores under 44 AD. So under 44 AD, Proviso 1 also tells you that if you have more than 1 crore turnover, but your receipts are from less than 5% in cash. Similarly, payments are less than 5%, your limit becomes 10 crore. It's on the same lines as this. So similarly from 44 AD also, it has gone from 2 crores to 3 crore, provided your total receipts are less than 5% in cash and payments are less than 5%. What is cash receipts and payments are given slides? Everything is covered. Applicability of audit. Just because I'm on this, I've just put up the chart. 44 AB 1A talks about turnover of exceeding 1 crore. If it is 5%, then it becomes 10 crores. 44 AB subclause B talks about profession. If your gross receipts are above 50 lakhs or 75 lakhs. Subclause C talks about if your profit is not shown at the rate given under 44 AB, 44A, 44 BB, and 44 triple B. I'm sorry, there's an additional B added over there. And you have subclause D where you are a professional, but you are not showing 50% profit. In that case, also you need to get audit done. And you have subclause E where you have 44 AD subclause 4, where if you have taken benefit of 44 AD and thereafter within those 5 years you discontinue 44 AD, then you are supposed to get audit done for the next 5 years. uh, irrespective of your turnover and irrespective of your profits. Coming to the third item, clause 18, adjustment of written down value for special rate of taxes. Now, what happens is there is an adjustment in the written down value which is required for the first year. So, with regard to our year, you will have 115 BAC subclause 1A when you go to it, and you have certain depreciation, additional depreciation losses which have not been absorbed. So you have claimed additional depreciation of 20%, and that could not be absorbed because there was not enough profit. That is still outstanding. In that case, that amount will have to be added to your written down value, and your written down value will have to be increased in that particular year. Now, this is only for the first year when you start going into the new system. If supposing you decide to not take it this year because you have old system is more profitable, if you go to the next year, this particular loss, first of all, will not be allowed and will not be able to capitalize it in the next year because there is no enabling clause in the law itself. So the law provides that if you go in the first year and in that first year there is any unabsorbed depreciation due to additional depreciation which you cannot claim under the 115 BA sections, that can be added to your written down value and you can claim depreciation thereof in the regular cost. However, if you miss out on that first year, the law does not provide for increasing the written down value. You will not be able to claim that additional depreciation and that will be lost forever. So if you are in the first year, you can increase your written down value. Thereafter, the law will not allow you to do that. So where the SSE opts for the option of 15 and 1423, and the SSE has unabsorbed depreciation which is not used due to section 5212, additional depreciation. The said unabsorbed depreciation is so the same thing which I have said. Yeah. So earlier it was 2021 for the other sections and 2122 for BSc and BA. Those years are already over, so let's waste on time. Yeah. So clause 19 talks about verification of deductions claimed. So there's a huge list of items which are there. 35.1, 35.1, those research and development sections. And you have 35 AB, which has been recently added. It is marketing value. So that is an additional section which has been added over there, which was not there earlier. However, the institute guidance note provided that you need to disclose and do it in the guidance note. And therefore, this is also a rectification like 44. So there is nothing new which the tax auditor has to do. He was already doing it as per the guidelines of the institute. They've just rectified it by adding that section. Clause 19, amount debited to profit and loss account on account of 35 ABA, amount admissible. This is applicable from assessment year 1780. So basically, this is basically your telecom charges, which is license charges, which are there. Okay, that have to be the spectrum charges have to be amortized over the life of the spectrum which you get. However, there are certain conditions put up which are to be met. If you do not meet those conditions, the reversal can happen in a later year. Yeah. You need to check the admissibility. No specific clarification regarding your section. Clarifications. So one needs to find out if supposing there is a violation in some later years. Do you mention it over here or not is not clarified. So 35 ABA is claimed. You claim the amortization over the years, and then you decide to sell the spectrum, okay, because of competition or something. Whether it needs to be shown over here or not, something which is not clarified. Guidance note of 23. So institute has come out with the guidance note of 24 also with the amendment section, but that's something addendum to the 23 guidance note. So 23 guidance note is a complete compilation. you need to refer to that with the amended guidance note in 24. So on 24 June 24, they've come out with a guidance note for the amended clauses of 3CD. One could refer to them. With regard to 35 ABA, it is given in the 23 guidance note in paras 31.1 to 31.9. Coming to 21A. Yeah. So we'll spend some time on 21A and then the MSME deductions. So basically what had happened was you have 37.1. 37.1 talks about general exemptions. Everything not covered under 30 to 36, not being capital in nature, not being personal in nature, only and exclusively for the purpose of business was allowed under 37.1. There was an explanation added after a few years to say that anything which is a violation of the law or is a penalty will not be allowed as deduct. That was because there were cases where uh, originally people were claiming uh, expenses like if I'm doing in smuggling of gold, I need to bribe the customs officer. If I'm doing I'm a builder, I need to pay protection money to the local don. Okay, now those expenses were actually claimed, they were allowed at certain levels by the courts, and therefore the government said this cannot happen, and therefore they came out with the explanation to 37.1. Now explanation to 37.1 is in statute for quite some time, so any penalties is not allowed is quite from quite some time. Recently, the government realized that the doctors and the pharma companies are in coma. So doctors would get paid for going to Bali. All paid is done. It will be a conference, but the entire thing will be borne by the pharma companies. Now, this nexus had to be broken. So there was an IMA, Indian Medical Association's guidelines, which provides that one should the doctors do not should not take any gratification from the uh, pharma company. Now, that was in statute. They said that there were case laws which were in uh, favor of, even in spite of the fact that the pharma companies landed up saying that, look, the guidelines apply to the doctor. What have I done wrong? I'm supposed to do business. If the doctor is giving me business, I give him some benefit, and I've claimed it as an expenditure. He's claimed it as income. There's nothing wrong. So there were few judgments where pharma companies claiming that we have nothing to do with guidelines was allowed as deduction. Now that was legally not correct. Supreme Court later on rectified. However, the government realized it and government amended the law in explanation 3 to 37. 1. What they did was they said that if you violate any guidelines given to you by IMA, that expenditure will also be disallowed. So guidelines by the trade body, guidelines by Institute of Chartered Accountants of India, guidelines by Indian Medical Association against public policy. All that public policy was there before also. However, interpretation of public policy was done in a different way. So therefore, they said that that will also be disallowed. Now, uh, earlier, so this had come in 22. Uh, However, the 3CD was not amended. 3CD had those three clauses which are reproduced over here. Expenditure by way of penalty, fine, or violation of any law for the time being in form. Expenditure by way of penalty or fine not covered above. Expenditure incurred for any purpose which is an offense which is prohibited by law. So these were the three clauses under 21A. Now 21A 1, 2, 3 covers personal expenses, uh, capital expenses, and it covers uh, club expenses. So to give a perspective, so the chart 1 to 4 covers personal, capital, and club expenses. And then you have these three items. Now, these three items have now been replaced by whatever is the language in explanation 37. Trade. So we picked it up and put it over here. Expenditure for purpose of which an offense was prohibited by law, or expenditure by way of penalty, fine for violation of any law enacted in India or outside. So you can't even go abroad and violate a law and then claim it as an expenditure. Okay. expenditure incurred for to compound an offense under any law for the time being in force in India or outside India. So you had these FEMA compounding where you pay lakhs of rupees for not receiving foreign exchange and all that. Those were claimed as expenditure. Now those also will not be allowed. FEMA compounding is your Bombay Municipal Corporation compounding expenditures, your other Customs Act compounding expenditure. Those compounding expenses also will not be allowed. Expenditure incurred to provide any benefit or perquisite in whatever form to a person, whether or not carrying on a business or exercising a profession, and acceptance of such benefit or perquisite by such person is violation of any law, rule, regulation, or guideline, as the case may be. So, all possible terms which that can be used have been used over here. This is a replica of your explanation. So I've reproduced the explanation over here, explanation 3. Same language. The order is put, so first and third clause has been put as sixth and seventh, fifth and sixth, and then the seventh clause. So the same language, they basically wanted to uh, bring that explanation in line. This was done in 22. However, they realized that it is not part of the audit report, uh, and therefore they've included it. Yeah. So the first three clauses talk about capital, personal, advertisement, and all. 20 made to align regarding a line of explanation 3 of 37. Yeah. So there was no specific reporting to be done. Now they say that specifically you are in your pharma company. So recently, somewhere in June, there is a UCAPA guidelines which has come. I don't know if some people are dealing in pharma company. UCAPA guidelines are there for associations. What it tells you that you cannot pay travel expenses of doctors coming for conferences. So what was happening was, I have a conference in Bali. Okay. Now the guidelines of IMA provided that those, if I'm taking them for a conference, and in the conference I'm talking about a medical subject, the expenses of the doctor can be sponsored. Now, so what was happening is, instead of having this conference over here, we decided to go to Bali, and we have a guy to sponsor the entire thing and not pay for it. In that case, they would pay for travel, food, everything. Now that is becoming another way of avoiding that particular guidelines. So in June, UCAPA guidelines have been brought in. All pharma associations and equipment manufacturers are supposed to follow it. So what the pharma companies used to do is, so if I take the doctor to Bali, they would deduct TDS under 194R. So I am covered. I don't have to do. Doctor will show it as an income. He really not bothered. Okay. So this was what was going on. So as soon as that 194 are 3 quarters coming, the government realized that these doctors are getting benefits in this form. So therefore, UCAPA guidelines have been come. So travel expenses of doctors are not to be paid by pharma companies. Those guidelines tell you. If they are paid, they'll be disallowed under this clause. Only thing given is the speaker's travel expenses are allowed. All other travel expenses paid under UCPA, so you need to disallow them. So no, we cannot. You could have 10 speakers. Yeah. We should avoid. We should avoid getting into this. So high time we started avoiding it. It's high time we started. Out of the box, put us in a box. Yes. Any out of the box thinking of this nature will put you into great amount of trouble. And for what? At the end of the day, you're the one who called it the baby. Yes. And you are certifying that it is. So, they will negative because they will. I with NFRA breathing down with NFRA. Your conscious should not. So you
Everybody talks about Nafra.
Yeah. So I'm auditing a German company just because we are on this topic. The guy is so scared of the auditor, the CEO of that whatever his German auditor says is God's gospel of truth. Now he says this cannot be done, it cannot be done. If I in India say that in Indian business this cannot be done, it cannot be done. Because for them, auditor is like demigod. So he's the first guy when he comes to meet, the CEO comes from Germany, the first guy he meets is the auditor because the German auditor will qualify anything which he does not like. So we need to get to a level where we don't get into any of this.
That's the status that we should be achieved.
Actually, yes. I was talking about these freebies to medical practitioners. Uh, Apex Laboratories Limited. This is the Supreme Court judgment which you want to do. So even in before the guidelines, this is applicable for some years. But the Supreme Court said even before that, it was against public policy. The interpretation is that the pharma company has nothing to do with Indian Medical Association is incorrect. It is against public policy, and therefore that is to be disallowed. So this Apex Laboratory is an example of that. With regard to doctors, so if you look at the doctor's definition over here, the subclause 2 over here, this does not in India or outside India. It talks only in India. So is it okay to give freebies to doctors abroad? I would think the law is today says that you can give. Okay, the law today says that you can give because if they can add in India or outside India the first clause, they can add it in the third clause. What was stopping them to add it over here? So it is purposeful that we do not include, or they think foreign doctors are honest. Indian doctors only are dishonest, like the Chartered accountants. So uh, in either case. So this is something which is there. A lot of these pharma companies who sell abroad, so they do have the same system as in India. So I have pharma companies which are selling in Africa, uh, Brazil, and all those countries. They have the same system as India. Uh, Only thing is, it, we've been identified. The government today has identified the doctors, and they have said that this cannot happen. Okay. So therefore, this is a specific, as of today, you can give benefits to doctors abroad, and that cannot be disallowed, and you should not put it over here. Fines paid to brokers of SEBI as fees. So these fines is against again policy. Now with this clause and these fines, though there is a judgment of Gujarat 1980, you as auditors will have to maintain it and claim it as a disallowance. Similarly, compounding offences and compounding fees are to be disallowed. For that reason, it says any expenditure with regard to violation. So, chartered accountants' fees for fighting a penalty matter in GST, it is for violation of law. If you ask me strictly, it is for violation of law and it will be disallowed under this clause. It is a matter of time before the department realizes this. They will start utilizing all your fees for this purpose. So you have ASMT 10, you have those ASMT 10 for under GST where they levy under clause under section 74, they levy penalty of 15%. Protecting or fighting expenditure for that purpose, all are disallowed under this. You have FEMA violation. You did not receive money in time, say 100, 180 days or 360 days. Nowadays, RBI is very strict regard to receipt of foreign exchange. Now, those foreign exchange, if not received in time, they give you extension, one extension, two extension, third extension, they say go for compounding. And the compounding fees can be as equivalent to the outstanding amount. So therefore, they're very strict about recovery of this, unless of course you prove the genuineness and you say that the party has bankrupt or has filed case and is not there, they might allow you to write off. But all those violations today will be disallowed under this particular clause. These are some of the cases. Municipal charges paid for regularization. you violated the DC rule. So I'll give you a classic example. You have those bronze grills outside your window. Okay. Now those are illegal. So the penalty for that is three times the size of the window or something like that. I came to know because there was an architect who decided to do it legally and apply for it. It took him 1.5 years to get that permission, and the cost was more than the penalty which he would have paid by making that bill. Uh, However, all those violations from EMC and all those other violations, all violation of law against public policy, and therefore under this clause of 37, explanation 337(1). Sir, in that case, on a more serious note, any lawyer, criminal lawyer, most of his team would be defending some violation of the other, some including of the other. That is not. So government is very clear. Government is absolutely clear. So, on a serious note, I have had, if you look at the old Kanga Panchiwala, there are cases where uh, chartered accountants' fees for tax matters has been disallowed. It is related to payment of tax. So, this is not fought earlier. It was being allowed earlier. Now the government is seriously considering those items. So all lawyers' fees, where there is penalty and they are fighting for penalty, all those expenditures will become disallowed now. So as a responsibility auditor, tax auditors should obtain in writing from the SSC details of all payments by way of penalty, fine, violation of any law. Uh, and also have proper due diligence, of course. Obtain a representation of the SSE as to whether the expenditure which is debited to the profit and loss account is prohibited by or not. So you are not supposed to be an expert in all pharma laws. So if you look at or for that reason various industries. So you're not an expert on Factories Act. You're not an expert on various other laws, and therefore you will have to take a legal opinion on whether it's a violation of law or not. So if the client is able to get a legal opinion that this is not a violation of law and this is a reimbursement, that serves your purpose. You need not go further. However, if you still feel you can read the law yourself, whether it's any relation. So one has to understand whether it is a reimbursement or compensation of the expenditure or it's a penalty. So, sir, it is that even innocent, innocent is proven guilty. That does not work because this whole thing will take 3 years, 2 years. So the expenditure is already incurred upfront. You are continuing to pay the lawyer or the scheme or whoever. So when does this disallowance kick in? So the department is likely to say as soon as it is related to penalty, it is to be disallowed. You can claim it. You can say that this particular expenditure is claimed by the assessor. There can be two views. You should give a disclaimer. You should not get it as a chartered accountant. As we said, NAFRA and everything else in the world will this thing. So you, uh, if on the lighter side, if you look at Nirav Modi, the tax auditor was also found behind bars and for no rhyme or reason. So there was no logic behind a tax auditor being put inside for a violation of banking laws. And the worst part was he had written that this is unsecured loan. So it's not that he had applied his mind, he has given notes and still he was put behind bars for 3 months. Yeah, so you need to take an expert opinion since you don't know whether it is correct or not. Yeah. If the fine is paid under protest, so then would be disallowed or yes, as soon as you pay the fine, it will be disallowed. If you fighting and you get a refund, you will get the money. They will not allow it as an expenditure. Will the client be able to again the disallowance of the so as of today, if you ask me, no one is disallowing these expenditures. So I have cases where in this year itself, someone had come with a bill and I told him, you go and get the bill change, otherwise I'm going to disallow it. So one has to be thinking ahead. Yeah. No, it is no. I'm not thinking ahead. You need to be yeah. You need to take a stand. You need to take a stand and So the tax auditor should be keep in mind the difference between the amount of prohibited and the amount paid, which is compensatory in nature. You have these two judgments of Supreme Court who bifurcate these things. These are old Supreme Court judgments. Don't read too much into it. The laws today changed. But yes, if you are caught somewhere on the back foot, you can use these judgments. Violation of law is not a normal incident. So, truck drivers, transport operator telling you that अब signal तो टूटता है साहब, वो तो कितना चलाएगा तो टूटेगा ही. The Supreme Court has said nothing to it. Violation of law cannot be part of your business and it should be disallowed. Okay. So the principle laid down in this Madi Venkataraman and company and Haji Aziz Shekur, where they say that it cannot be part of your business. I've already discussed the lawyers and consultants fees to that extent. Yeah. Any questions about this? Then we move on to MSF. This is also one of the hot topics. Now, the clause 22 amount of interest inadmissible under section 23 of the Small SME Enterprises Act or any other amount not allowable under subclause 43BH. Now, what happened was last year the government has said that small and micro enterprises, if you have not paid them as on 31st March within the due date which is applicable, then whatever is the expenditure will be disallowed. Okay, this has nothing to do with helping the MSME, first principle. So if I buy something on 1st April, I don't pay it till 31st March and I pay it on 31st March, that is okay, it is allowed. It is only when I don't pay it on 31st March that you disallow it. So it has nothing to help MSME. It's just a tax starting. So what they did was they tell you that on 31st March, if there is any amount outstanding on an MSME, which is beyond the payment of 45 days, that will be disallowed. It will be allowed in the year of payment. So we'll be taking a few examples, but this is only for small and micro. It is not applicable to medium enterprises. The definition of what is a small and micro. This act has come in 2006. No one was looking at this act till it was brought to Income Tax Act and started harassing everyone. So uh, it is only when it was brought into the Income Tax Act that you suddenly started sitting up and looking. So today or yesterday there was an article that they're going to further strengthen MSME Act. So MSME collection. So if you have something collectible from an SSE, and if your fees is collectible, you all are MSME. Majority of us are Aadhaar Udyam registered. That is something which the bank tells you to do when you open a current account. So Aadhaar Udyam is one of the proofs which is to be given when you open. There are two registrations of government required. One of the bank says easiest is go to Aadhaar Udyam, get yourself registered. Now majority of the MSMEs have done that. So does it help you in collecting the money? The answer is no. The system does not work. However, they will do an income tax disallowance under this law if you don't pay it within time. Okay. Now, what is small and micro and medium enterprises? There are two conditions. One is plant and machinery, and other is turnover. If your turnover is less than 1 crore and your 5 crores and your plant and machinery is less than 1 crore, you are a micro enterprise. If your turnover is less than 50 crores, above 5 crores but less than 50 crore, and your plant and machinery is less than 10 crore, in that case you are a small enterprise. Similarly, for medium enterprise, above 10 crore, below 50 crore worth of plant and machinery, and below 50 crore of turnover. There are a lot of benefits with regard to MSME other than this. So collection of dues is one aspect. There are other benefits. So you get concessional rate of tax, interest in your bank loans. There are government organizers will be doing it. So what is protection against delayed payments? Okay, from the buyers. Section 15 says that if there is a delayed payment, you will get interest. Time-bound settlement of payment-related disputes with buyers of goods. So if you go to court with regard as an MSME, you're supposed to be taken on priority basis. However, the courts one run wonderfully, and you might take 10 more years to get there. That apart, the interest is that if you ever get it. So central government measures for promotion and development. Central government is doing a lot of activity for promotion and development. There are RBI guidelines with regard to ensuring timely and smooth flow of credit to MSMEs. So RBI has actually come out with guidelines that the banks have to give so much percentage of their loans to MSMEs. Okay, that those are targets given to ONDC and preferential policy. So if you are going to supply to the government takes gives you preference as an MSME. So if it's a big manufacturer and MSME, government would give preference to MSME manufacturer, at least on paper. Then coming to 43BH, this was introduced in from 1/4/2024 in the last budget. Assessment year 24-25, if this becomes applicable. It applies to small and micro enterprises. If you have not paid to the person within the time specified under Section 15 of the MSME Act, then it will be allowed as deduction in the year of payment. There is a provision to 43B, which is applicable to all other clauses, which is not applicable to this clause. That is that if I pay before the due date of filing return, I get deduction of it. So GST, I have not paid of March in April. I pay March GST in April. I get deduction in the return because I paid before the due date of filing return. So there is a provision which says that if I paid before the due date of filing return, it will be allowed. However, with regard to this clause, they say nothing doing. That provision is not applicable. If you have paid it in time, you will get it in the previous year. If you have not paid it in the year of payment, so supposing I was supposed to pay some MSME before 15th April, my due date was 15th April. I did not pay it on 15th April, I paid it on 26th April. If I paid it after the due date, it will be allowed in 24-25 and not in 23-24. Okay, that could have a tax impact. You'll have to pay tax for the previous year and then claim as a deduction in this year. Okay, so this is the provision with regard to 43BH. What is the due date as per Section 15? So the due date as per Section 15 says that if you have an agreement with the MSF, say for 45 days, that is fine. However, if you have an agreement for more than 45 days, so if I tell the MSME I will give you money after 90 days, that is not allowed. Your upper limit is 45 days. Whatever is your agreement is not relevant. So maximum you can give it is in 45 days. If you don't have an agreement, you need to pay within 15 days. So if you don't have an agreement, you're supposed to pay that amount within 15 days of the bill. You're supposed to pay that amount. Okay. So that is the due date as per the Section 15 of the MSME Act. What is the appointed date? So, or what is the date of delivery? Supposing I make a bill on the 1st of July, delivery comes on 15th of July. It is the delivery which is important. From the delivery date, that 45 days or 15 days will be calculated and not the bill date, unless there is an agreement to the other effect. So if I have made a bill and the delivery takes 2 months to reach Sikkim, the due date will be calculated from the date when the actual goods reach Sikkim, and thereafter 45 days or 15 days, whatever is applicable. So the due date is from the date of possession. Another important thing is that after receipt of the goods, within 15 days, the buyer can raise an objection in writing with regard to goods. If an objection is raised with regard to the goods, in that case, the due date will be calculated from the covered in the morning, sir. Acha, it's covered in 43 Okay. Yeah. So then we will not waste our time. All this happens. Okay. Okay. Yeah. So I had a lot of slides on this. We'll take it. Yeah. Just one thing. Can 44 disallowed under 43BH apply to 44AD? The answer is yes. There is one judgment of the Panaji ITAT also. So even if you are in 44 AD or 44 ADA, this disallowance of MSME would get covered. These are some of the questions. This is circulated. Yeah. The last one, 32A. Details of brought forward losses and depreciation. So details of brought forward and depreciation, when I was doing those, the first clause, I had said that any loss which is outstanding will have to be written off. So you need to adjust those losses over here, remove it over here, and the and it has to be added to your written down value. So adjustment, removal of those losses from the carry forward will have to be done over here. This amendment has also been brought in over here for 115 BAE and 115 BA C subclause 1A if you do it. So insertion of one by so you need to do it in the same line. So if as I said, if you have carry forward depreciation which is to be did not claim in the first year, you can add it to your written down value, and the loss needs to be disallowed and shown over here. That is 32. Yeah. Now coming to the common errors. Yeah. So as I said that SA 700 has been notified. Your 3CB and 3CA does not have those clauses. You should disclose those clauses in clause 3 or clause 5, clause 3 of 3CA or clause 5 of 3CB, qualifying that these is my responsibility. Now, this was not done in majority of the cases as per the quality control board. In some of the cases, they had said that it is covered. Please look at our notes, and it is covered under the notes. However, the institute has specifically said that it should be in the main audit report, and this cannot be form part of the notes. It should always be mentioned in the 3CB subclause 5 or 3CA subclause 3. This is one of the common errors which the quality control board had said should be rectified in all cases. Next is you have 48.3 and 48.3. Any payment of more than 10,000 rupees in manner other than account pay check or account pay demand draft. Now, it's a common thing that you do not have those checks. So I do not have the Xerox copies of the checks to find out whether the check is an account pay check or a bearer check. Now, this is a common thing. There is a note which uh, all of us put that we do not have enough evidence, and therefore we relied on the representation of the uh, client to say that every account pay check, it is an account pay check. Now, those notes are missing in majority of the cases in which the quality control board have mentioned it. Some of the auditors who were asked also said that we put that in the notes kept separately. Again, the board has said that you cannot have this in a separate thing. You need to mention that you have relied on that representation because you do not have enough evidence to show that this particular is in account paying check or account paying demand. Old timers will remember. Discharge checks coming back. Yeah, discharge. So, you should take proper letters. For that reason, when you go for peer review, one of the things which the peer reviewer is going to ask in a tax audit report is a certificate from the client saying these are account paid checks. It should always be form part of your documentation. Similarly, for 269 S&T loans taken, you do not know whether it's through account pay check because the Xerox of the check is not there. And therefore, the institute expects you to put a note that I have relied on the representation of the client to say that these are through account pay checks and disclose it in clause 3 or clause 5 of 3CA or 3CB. This was also one of the things which was missing in those things. So, going to the yeah, this was the same thing. Okay, with regard to books of accounts, location of the books of accounts not being mentioned. So, some of the audit reports, where are the books of accounts kept was not mentioned. It is your duty to see those you mentioned where the books of accounts are. Whether it is on computer system, where is the server stored, whether what package is the person using. You need to understand that in the current year, you are also supposed to certify the audit trail, whether the companies are keeping the audit trail or not. Now, for that purpose, you are supposed to look at the package. Please see that you have all these things even in your because these are common errors which are found uh, when you're doing these audits. Uh, all the relevant documents examined are not mentioned. So if you have examined the sales bill, purchase bill, vouchers, secretarial material, confirmations, they are not mentioned as verified. So you are mentioning what you have verified. In those items, you are not mentioning those items. The institute expects you to mention everything which you verify in the audit report. Uh, Similarly, reference to all such supporting evidence relevant documents are also required to be made under this clause. Coming to method of valuation of closing stock, 145A expects you that the closing stock should include the GST credits and all that. Now, 145A is in statute from a very long time. Besides that, that is one of the things. There, of course, you have the judgments in your favor. The Bombay High Court in Diamond Cam says that net and gross is nil even after 145 introduction, and therefore net is also okay. There is no impact. However, if you since we rely on that particular judgment, you should mention that in your notes to account in clause 3 and clause 5 of 3CA and 3CB. One of the things is you have finished goods, you have raw materials, and you are work in progress. The separate valuation methodologies are not mentioned in certain cases. You should see that the valuation methodologies are mentioned. In this case, you should also check what is the mentioned methodology in the company logbooks. So your statutory auditor mentioning something else, you mentioning something else can get you and the company in real big trouble. So I'm fighting a case in income tax where the addition in stock is on account of the fact that ROC records show something else. Uh, uh, the tax auditor has mentioned something else, and he has rejected the books of account based on it. So one needs to be very careful when you correlating this data. Uh, Amounts not credited to profit and loss account. So one of the items mentioned over here is GST. Now GST realized is not your income. It should never come over here. So people out of overzealousness keep writing what is not. So you need to be careful to include what is to be included. Also be careful not to include something which is not included. So you have 36(1)(2), which says that any bonus or commission paid to directors or partners, which is in the nature of profit. Now there you need not mention regular bonuses given if you are not qualified. You need to mention it only if you are qualifying. So I'm finding a case where auditor by mistake has mentioned the regular bonus given to the directors, and the investing officer says, now since your auditor is certifying that this is bonus which is in the profit nature, I'm going to make an addition. And sometimes it becomes very difficult to prove that everyone was given that bonus if you mention it over there.
Surprisingly, the tax audit report is very sacrosanct for the
You
associate
want to, yes,
for the department.
for the department. Yeah. Clause 17, I have time. Clause 17, disclosure for section 15C. Over here, reporting under this clause is required where land and building of both is transferred during the previous year for a consideration less than the value adopted or assessed accessible under any authority. However, in some cases reporting under this clause has been done when consideration received or transfer of land, both the value and what we say are same, which was not required. So even if the value is same, disclosure is more. That is not required. Only if there is a difference in value reported over there. Unless it is not, there is no difference in value, you need not report it. Depreciation, addition and deletion reporting tax audit reports are not in line with the figures addition, deletion, audit financial account. This is a very common error. Your addition and deletion in your financial accounts and your 3CD does not tally. A very common error. You should see that in all cases this has to tally. Amount of a separate column has been considered for amount of adjustment or amount of exchange fluctuation under the column additions. In few cases, the said amount is not shown in tax audit report, e-filing utility, while the same was reported in annexures attached to the uploaded tax audit report. So you cannot, something which is to be mentioned in the main report itself cannot form part of the attachments. In some reports, the respect to addition to block asset, date of purchase, and date of put to use are reported as the same in respect of each item under each block of asset purchase, which is practically not possible. So you put one date in all the assets, which is not a practically correct this thing. Likewise, in respect of deductions from block of assets, date of sale reported were same in respect of each item under each stock of assets sold, which practically is not proper. So please look at those dates properly. You are certifying those depreciation schedules. In certain cases, single consolidated amount was disclosed at the end of each half year of the financial year. So what you do is instead of putting various dates, you put one date and you say 30th September in all cases, which is incorrect. In certain cases, correct classification of assets was made. This will incorrect classification of assets was made. This will result in higher or lower claim of depreciation as actually under the income tax act. So you need to look at the classification also. Please classify them properly. 36158, that is those provision for gratuity and PF. In various tax audit reports, details pertaining to provident fund has been reported in 20, but nothing was reported in ESIC fund, while regular contribution to the same was clearly reflected in annual report. So you miss out on the ESIC contribution, which is a smaller amount, but it is there in your statutory report and not in your 3CD, becomes a problem. Due date reported on relevant fund was not correct in most cases. So what is the due date has to be mentioned by you, and what is the date of payment. If the due date either you don't know, then you take it from the client, but put the correct due date in that. Under this clause, only employee share of contribution to any provident fund or superannuation or gratuity fund or other fund of the welfare employees need to be reported. While in clause 26, only employer share needs to be reported. So what happens is sometimes employees and employer share is added, which is incorrect. You need to put only the employee share of in these clauses. Yeah. Coming to the other important clauses. Coming to the applicability of 44A, 44AA2 talks about maintenance of books. I just want to point out one thing over here. Doctors are supposed to keep a daily patients register in Form 3C, which is in this format. Patient's name, nature of professional service provided, fee receipts and that. So books of accounts, when you look at what books of accounts, if you have a doctor client, he's supposed to maintain the patient's register on a daily basis. Majority of the time when I look at some of the doctor's audit report, this is missing. That's why I wanted to bring that out. Similarly, books of accounts to be maintained. There is definition given under 44A. There is also definition given under section 212 of the Income Tax Act as to what is books of accounts. You have the cash book, journal, ledger. One important thing is the red mark. So you're supposed to maintain photocopies of sales bill above 25 rupees. Okay. Similarly, for expenditure, it is 50 rupees. So it's really one has to look at very minutely when you're doing audits. Okay. Coming to, so I just wanted to point out a few things which are which need to be kept mind. Applicability of 4480. Now 4480 talks about 6% when other than cash. For cash it is 8%. As we discussed earlier, this is not a blanket scheme where you can show 8% and balance. So if you have earned 10 lakh rupees of turnover, your actual expenditure is 1 lakh rupee, and you think you can show 8% of 80,000 and capitalize 9 lakhs 20,000 is incorrect understanding. Your actual profit has to be there. You cannot capitalize something which is without paying taxes. So, so you have 6% and 8%. Section 28 and 43C deductions are deemed to be taken. There is no allowance of interest and remuneration to partners after 17, 18. So you can't claim from that 8% further interest and salary expenditure. it is not to be allowed. Everyone's aware of it. I'm just repeating it. Restriction of 5 years in the benefit. So if you have 5 years, if you have claimed 4480 for the next 5 years, if you don't claim, then you need to get the books of accounts audited for the next 5 years, maintain the books of accounts and get them audited. LLP is not supposed to get benefit of 4480. Similarly, if you are claiming deduction under 10A, 10AA and 10BA, you cannot claim deduction or under chapter 6A, 80HH to 80RRB, then you're not supposed to get 4480. If you have professional income or commission or brokerage income, you're not supposed to get 4480. You also, if you have transport business, you cannot claim 4480. You need to go to 44A. Per year, the turnover will be 3 crores if you meet the conditions. Presumptive income of the business. This is something which I've already covered. You need to bifurcate between cash turnover and check turnover, and accordingly show 6% and 8%. We'll be taking elaborate examples for this. 44 is ICDS applicable to 4480? The answer is yes. The circular is there, which answers the question in the positive. Method of accounting, really it is. So I have a turnover of 1 crore 30 lakhs. This is just an example to explain to you what is cash and what is check turnover. I have a turnover of 1 crore 30 lakhs. I have collected 50 lakhs in cash. Collection on by account pay, check and other modes, RTGS, NEFT is as follows. Up to 31st March is another 50 lakh rupees. Up to 30th September 24, I collect 20 lakh rupees by check. And 10 lakh rupees is collected after 30th September on 31st January 25. In this case, assessee will have to show 8% on 60 lakh rupees. That is 50 lakh rupees of cash and 10 lakh rupees collected after 30th September. So you are supposed to collect money in methods other than check, other than cash, that is account pay, check and account pay, demand draft, before the due date of filing return. So if you collected those before the due date of filing return, it is included in that particular other than. Otherwise, it will be deemed to be cash, and therefore you have to show higher 8% profit. Okay. 4480 4 and 5. 4480 4 and 5 talks about profit if you have shown 4480 and within the next 5 years you decide to not show 4480 profits, lower profit. In that case, and the total income exceeds 2,50,000. So your basic exemption, your income exceeds basic exemption. In that case, you're supposed to get your books of accounts audited. You're supposed to maintain the books of account and you're supposed to get your books of accounts audited. Gross receipts, let's not get into it. With whether it should include GST or not is a common question which keeps being asked. Whether it depends on what method of accounting you are following. If you are following net method, GST is not included. If you are following gross method, GST should be included. All other things, I think, not something which we need to discuss. Recovery of bad debts cannot be part of your turnover. Yeah. Coming to these examples, so we'll discuss 4480 applicability and the audit applicability based on example. So first turnover is 90 lakh rupees, your profit percentage is 5%, your gross total income is 3,50,000. If you claim 4480 and therefore since you are showing less than 6% or 8%, you're supposed to get audit done. Okay, under 44 ABE, subclause E, because it gets covered under 44 AD, subclause 4 and 5. You are showing profits less than what is required. The next example, 90 lakh rupees, your profit percentage is 4%. Gross total income is 5 lakh rupees, again above the basic exemption. It's the first year. There is no need for audit. You need not go into 4484 and 5 are not covered, and therefore you need not get the audit done. However, this is the case where there is an other view possible. So there is a view which says that 4480 is compulsory. Whether it is not optional. If you don't show 6% or 8%, you need to get audit done. Okay, that is one view which is there. However, I do not subscribe to the view. Similarly, even the department in one of the presentations where they made it for return, it was done in the institute and other places, where they have said that in such cases, 44AD is optional. Okay, if I have not claimed 44AD, this is my first year, my turnover is 90 lakh rupees. I need not get my audit done under 44AD because I have not claimed 40, I do not fall in 44AD 4 and 5. If I don't fall in 44AD 4 and 5, and neither am I covered by 44AB, and therefore audit need not be done. If I have not claimed, in this case it is the first year, even if it is the third year, and I have not claimed 44AD, in that case, according to me, audit is not required. There are certain chartered accountants who take a view that 44AD is compulsory. If I don't show that 6% or 8%, audit is required. According to me, that is not the stand of the department. So 1 lakh, yeah.
Sorry, like I have a client who has got for the first time in the year ended 31st March 24 and FNO loss. Audit is not compulsory.
Provided is 44AB is not covered. 44AB first one above 1 crore, 10 crores limits.
For FNO, you take the profit loss together as
And total it up. Yeah. So if I have 3 lakh rupees of profit and 5 lakh rupees of lot, my turnover is 8 lakh rupees. Yeah. Okay, so according to me, there is no need, and the department is also processing. The last year also the same issue was there. All the returns have got processed. No demands have been raised. Only thing you need to give a balance sheet and the profit and loss. Okay, so next example, 1 crore 50 lakhs, 2%. Gross total income is 2 lakhs. Whether 44AD is claimed, yes. Do I need to get audit done? My answer is yes, if you're because the turnover is above 1 crore 50 lakhs. If you look at pure 44AD, no, because your turnover, your profit is below 2,50,000. So one of the conditions under 44AD 4 and 5 to get audit done is my basic income should be higher than the basic exemption 2,50,000.
But if I have other income and it's beyond that,
Yeah, so if your total income is more than 2,50,000,
income,
total income, it talks.
you have not other income not tax.
Yeah, to do tax.
This is only from the business.
Yes,
And I have other income.
income also. Yeah, I'm going to take an example. So we're going to take a few examples because this is a very common question when you are because 31st July is there. Very common question in majority of the cases. So you have 95 lakh rupees as the turnover. Profit margin is 3%. There is a loss of 1,50,000. If I've claimed 4480 earlier, then I need not get the audit done, even though I'm not showing 4480 because my profit is below 2,50,000. Okay. Similarly, 1 crore 75 lakh rupees, 1%, 3,50,000, including interest of 1,75,000. If I claim 4480 earlier, I need to get the audit done because my total income is above 2,50,000. Yes, कुछ आया? ये चार्ज नहीं हो रहा है. हाँ. 1 crore 95 lakh rupees the turnover, no cash receipts or payments. 4% is the margin. Gross total income is 7 lakhs. Some 14 crores as not from GST, not purchases from not GST parties. Now, in the assessment, one of the first question asked was you gave me a list of all the expenditures of those 14 crores with the bills, with the vouchers, because if they are not registered with GST, and without any just issuance purpose. So it took me 2 months to combine the entire details of what someone user might not come with the GST. And in the mostly hearing, when I told them, thanks. So the personal hearing, when I told the lady that you are looking at a company which is uh, having a turnover of more than 1,000 crores, and you are talking about 14 crores, the answer was that then get a disallowance of 14 crores. So unless you want a disallowance, you upload all the invoices and give me evidences to show that those are genuine purchases. So we those purchases were actually, the factory was running canteen for 500 people in Jammu. Now that canteen used to buy vegetables, fruits, gas, which are all locally purchased, and there were no actual registered dealer. So we had to get the entire file scanned and give them and see that the total within Excel to see that the total tallies to that 14 crore. So when you fill up this 44 for GST, please be very careful. Get a bifurcation of what the figures are. In the assessment, they might just pick up one figure and tell me, give me all the details of this. Okay, and life will be really miserable. So in our case, beside after this was solved, he said, with regard to GST registered person, you give us the entire listing. So we, in our case, it was better that we had a 2A. So we gave that 2A listing, but that 2A listing was more than what was put over there. So it is really important in a very big organization also that you have the reconciliation in place for the GST thing, because in assessment ultimately it will come out to you. Uh, since we are here again, 4480, so 1 crore 95 lakh is no cash receipts. 4% is the margin, 7 lakhs is the gross total income. You've claimed 4480. Since you have claimed 4480, you need to get the audit done, though it is not covered under 4480. Your turnover limit is 10 crore. Uh, these are some of the issues under 4480. So 22-23 I had done, and I have got 4480. 23-24 I have taken 4480. In 24-25 convert into LLP. Since I'm converting into LLP, 4480 is not applicable. Do I need to get audit done? If it is applicable under the LLP, otherwise no. Similarly over here, uh, 22-23 I claim 4480 in return of income. 23-24 the return of turnover was 2 crores. The SSE was required to get the audit done. He got the audit done. 24-25 was bad for him. The turnover went down to 90 lakhs and the profit is 3%. Do I need to get the audit done? The answer is yes, because one of the years I claimed 4480. Similarly over here, if I get professional income, I'm not entitled to 4480. So in the year in which I get my professional income, I cannot claim 4480. I need not get audit done for that purpose. You need not pay advance tax if you're covered under 4480 or 4480A. You will be charged only interest for the last March month. Can I show higher, lesser, uh, only 8% in getaway? These are some of the cases in favor. However, as I said, they are with regard to 44A and with regard to some sections which had some specific language. I would not encourage any of this. If you have higher profits, you need to show higher profits. Anand Kumar versus Assistant Commissioner of Madras High Court directly on the point where they have said that nothing doing, you need to show the actual profit. Similarly, you have Pariza Zorabian Irani, Bombay High Court, where she was supposed to be penalized for not getting the audit done under 44 AB. So she was someone who was a partner in uh, AZB Legal Services, where she had got a salary of more than 1 crore rupee. Now the assessing officer that you need to get audit done. They said no, audit is not required. They interpreted what is 44 ADA, and it was said that she's not doing profession. She is doing as a partner, and therefore she is not required to get audit done. However, they relied on Anand Kumar, and they have detailedly discussed as to how you should show profit. So Bombay High Court is against you. You should not do anything of that sort. Uh, I think I've covered everything else. 44A has a different language, so there you can get away with showing only the profits which you want to disclose as per that. In other cases, it's 10%. Yeah. If you don't get the audit done, penalty of 271B of 1.5% of 1,50,000, everyone's aware. These are some of the reasons why penalty need not be levied because of that. If you have more than two businesses, you're supposed to club them and show it in your 3CD as one business. A lot of people have two different proprietorship concerns doing two different things. Need to club it and show it as one 3CD. Valuation of stock, I think I've covered. You have Diamond Chem Limited ITA Bombay High Court, which is in favor. If you're following net method, if you are ever in trouble, one of the questions income tax department nowadays asks is whether you're following gross method or not net method, and please explain why you have not done 145A adjustments. You can use this particular judgment to say that the impact is nil. GST reporting also, I think I've covered everything. One has to look at because GST will, when you fill up that table over here, what will happen is GST also has capital expenditure. So when you claim GST, there are capital expenditures also. Here it is the total expenditure claimed in your profit and loss account. So you'll have to first take out those capital expenditures, then do those bifurcations. There are items like salary, depreciation. Now those are actually not covered by GST at all. So you need to put a note saying that these items are not included and not part of the table put over here because it will not study otherwise. So you need to actually keep working of how you filled up this particular table so that you do not fall in trouble with the department. What is a composition dealer? I think we almost 10 minutes are left, but let's not get into composition. I think all of you all are aware what is a composition dealer. So composition dealer cannot charge GST, dealer cannot enter. The problem with composition dealer bifurcation is your GST returns do not have the bifurcations. So therefore, finding out who is a GST composition bill, doing it physically becomes impossible. So therefore, you need to put a note saying that this information is not available. Now, before you say that the records are not available, tell the client that as per the GST law itself, section 35, you are supposed to maintain these records. You have not maintained and put a qualification that those things are not available. But then you will have implications under GST where you will have to be, this will be taken and to levy penalty because when they come for audit, they are going to first look at your audit report and see what is written over there. So one needs to be very careful when you are dealing with both the laws. The implication of penalty could be there in the other laws also. Similarly, in Rule 56, 57, 58, you need to maintain detailed supplier wise, whether and all those details are supposed to be maintained by the clients. They do not maintain is a different question. We need to put appropriate notes to do it. Uh, Details available in 3C GSTR 3B gives you supplies under composition scheme exempt and nil rated supply. Now this is there in your 3B. However, none of the clients fill it up because there was a notification which said that this need not be filled up. Okay, because they were having trouble getting into it. So therefore, maybe from 23, 24, you might have specific cases where they might have filled this up. Earlier, we were never seen this filled up because there was a notification under GST that this need not be filled up for simplification purposes. Okay. The annual return of GST in Table 16 also calls for details of purchase from composition dealers. However, again, there was a notification 79 which said that exempted people from filling that up. So you don't have this information, and at the same time, 3CD requires you to fill it up. You will have to put up appropriate notes saying that this information is not available, and therefore I have not filled it up. Uh, Data to be taken from GSTR 3. GSTR returns for reports to a to. So you have that in place. One will have to reconcile the same with the book ledgers and then get the total expenditure of registered data. This would include capital expenses on the credit on which credit cannot be taken or ineligible credits also. You will have to bifurcate that. The total expenditure to be taken for trading, profit and loss and balance sheets. The registered dealer supplies from point above will need to be deducted and total expenditure given as the expenditure to registered uh, unregistered expenditure. Note on non-maintenance of data by client and hence unregistered is to be taken. This is a note which we generally put up in our audit reports. Thank you very much for your patience here. Any questions with regard to any of it? I'll answer. Thank you.
Thank you, Ashok sir, for all your valuable input. All the points which you said you will definitely consider when doing audit and all. So with this, I would conclude today's session. Thank you all for joining us today.